Thank you for joining me. I'm Alex, and I want to talk about HP today. So there's two HPs, Hewlett Packard Enterprise, and apparently these guys have renamed themselves HP Inc., which I don't like, but So they still make printers, even though they're not called Hewlett Packard anymore. They still make computers as well. Pretty good gaming laptops if you were looking for like mid-level. Obviously a bunch of other stuff as well. Current price $24.46, which gives them a market cap of $31.5 billion. Dividend yield currently 3.22%, which is exactly the same as whatever we had yesterday. I don't remember. Payout ratio 35%, which is vastly lower than what we had yesterday. Revenue $56.6 billion, slightly down. Earnings $2.8 billion, also slightly down, which gives them a PE of 12 with a forward PE of 9, which very nice. Also much lower than what we had yesterday. Total assets $34.7 billion, total liabilities $36.9 billion, which gives them a negative total stockholders' equity of $2.2 billion. And risk factors, the balance sheet being a huge one, I think. I really don't like that. Overall, I don't think that there are any major risk factors here. They've been on top of the market in printers for a while. Obviously, anyone can make a laptop or a computer, so what they have going on for them is brand recognition, basically. So I don't think there's really a lot of risk factors here. What's going on with the balance sheet, which is just getting worse while they made $2.8 billion, stock buybacks, basically, which I don't like. Why, if you're already in the negative, why are you buying back stock? Why are you not, getting a positive balance sheet? I don't understand that. But beyond the balance sheet, obviously there's nothing here for a growth investor because the growth is negative, even though supposedly forward PE being much better than the current one. There's some growth here, but I don't think that it's quite enough for a growth investor. For a dividend investor, I think this is a very interesting stock with a good dividend yield, good payout ratio, and trash balance sheet. If you can look past the balance sheet, and obviously since the balance sheet just is that bad because of stock buybacks, I think that shouldn't really be a factor against this company, but it very well could be. For a value investor, the balance sheet is just trash, but the PE is good, the dividend is good, and I mean the revenue is stable. It's going down, but it's not going down by much. And these numbers were reported in October, so obviously a lot of the reluctance to invest is already factored in. So it could very well go back up quite significantly. So overall, value investors, if you can look past the balance sheet, which not sure if you should, but stock buybacks obviously being good for the stockholders, I wouldn't necessarily hold it against them, but that's a decision you need to make. If you can look past the balance sheet, I think it's a very interesting stock to look into. The PE is very nice, the dividend is pretty decent, and the company being as stable as it is and as old as it is, in this field anyway, I think speaks very well for this company. So definitely have a look, do your own research as always, but very interesting company. I might actually invest some into this company again. Bought it before, sold it when I sold everything else. Not really upset about buying it, not really upset about selling it either. I think I lost some money, but don't quite remember. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.